What's up, guys, and welcome to the channel. In today's video, I'm going to be doing a review of SCHG, which is the Schwab US Large Cap Growth ETF. And let's actually go check it out on M1 Finance real quick. SCHG. So you can see current stock price $75.80. It's actually down today $1.62, or down 2%. And if we look, they have a dividend yield 0.44% and an expense ratio of 0.04%. However, when you look at this stock, you're not really doing it for the dividends. If I go to year to date, it's up 39.34%, which is a great growth rate. That is insane. And I also wanted to go to Schwab just to show you, once again, their dividends, the 0.44% yield, 34% payout, actually has a negative growth rate on the dividend. And if we look at the history, it's probably because they gave some large dividends and then some smaller ones over here, and the stock split. So that probably messes up SWA or Seeking Alpha's data. So now let's just go over to their fact sheet. So once again, SCHG, the fund's goal is to track as closely as possible before fees and expenses the total return of the Dow Jones US Large Cap Growth Total Stock Market Index. And it's just straightforward, low cost to offer tax efficiency, and it can serve as part of the core of a diversified portfolio. And it just gives you simple access to large cap US equities. And these stocks are classified as growth based on a number of factors. And if we scroll down, this is the data. This is going to be the data as of, well, it looks like it says as of market open of the second. So today, if we just look at their top 10 assets, they have Apple at 13.92%, Microsoft at 12.03%, Amazon at 5.65%, Nvidia at 5.53%, Alphabet at 3.75%, Meta at 3.44%, Tesla at 3.39%, Alphabet Class C at 3.24%, then United Health Group at 2.27%, and then Visa at 1.87%. And honestly, this just looks like the S&P 500, but with the percentages doubled. Because I want to say that Apple, their percentage on the S&P 500 is around anywhere from 6 to 8%. So this is just giving you a little bit of a boost of the stocks that are already growing the fastest. And if we look at the sectors, they have tech at 45.46%, healthcare at 13.47%, discretionary at 12.4%, communication at 12.04%, financials at 6.9%, and then industrials at 3.37%, and then the rest, consumers, materials, energy, real estate, and utilities at less than 2% on each of those. And then let's go over to the back test. So I'm doing a back test with $10,000, and I'm going to reinvest the dividends, display the income. And I just wanted to do this SCHG and SCHD just to compare the two funds since they're from the same company. So I already hit analyze. And as we can see here with this chart, with an initial balance of $10,000, SCHD, SCHG grew to $58,523, and SCHD grew to $41,099. So SCHG is up 17%, or 17,000. And then you can see the best year, I'm going to call it G and D. G was up 40% and D was up almost 33%. However, if you look at the worst year, G was down 31.8% and SCH and D was down only 5.56%. Then, of course, on the chart, you can see that G had insane, explosive growth. However, it also had, it absolutely tanked during the down periods. whereas D only dropped slightly. And then, of course, once the stocks went back up in 2023, G significantly outpaced D. However, I wouldn't be against having 50-50 SCHG and D. Now let's go to the dividends. You can see, of course, SCHD was always going to win because they increased their dividend by 12% every year, 12 to 15%. So SCHD in 2012 gave $313, SCHG gave 159, and then it goes up and then eventually comes down. And so the dividend on SCHG, it's inconsistent. However, the main goal and purpose of SCHG is just massive growth. However, as you saw on the previous chart, if I scroll up, they have massive growth, but they also have massive losses. And so right now, SCHG is almost, I want to say it's pretty much double what the S&P 500 is. So you just have to decide, do you want to experience the highest of highs and the lowest of lows? Or would you want something more consistent like SCHD or other stocks or other ETFs? It's just your opinion. And I think for me personally, probably just going to stick with SCHD and the S&P 500 because I'd rather, as much as awesome as a 40% gain is in a year, when you're also going down 31%, almost 32%, that's not really good too for preserving your capital. So guys, thank you for watching the video, and I'll see you in the next one.